All right, the next currency pair I want to take a look at is the dollar versus yen. And I looked at the weekly chart and the daily chart. They don't really say a lot to me right now, so I'm going to focus on the 4-hour chart in this video. If we take a look at this currency pair, what is a key area for me going into the new trading week is this yellow area right through here. We can see a number of different times where the market found resistance through here. There's a nice little ceiling here. Broke above the ceiling and rotated to the upside, and then came back down and retested that old ceiling. Now became a floor. What was important from a technical perspective is that we did break below this level, and that should have led to the market moving to the downside here, but it didn't. We couldn't sustain momentum even though we fell below the 100-hour moving average. That's the blue line in the chart, and we rotated back to the upside. And the key thing, and we see this pattern reestablish itself on a number of different charts, and I talked about it in the euro, was reestablishing the support against the old swing area right through here, and that gave the clue for buyers to take this price higher, and ultimately boom, 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 all the way to the upside of the next 6 or so trading weeks into the high price that we saw just a few weeks ago in this pair. Now this is the trading for this week. And what we know in trading this week is, what do? We came back down to that area right here on Monday, and then later in the week we came back down to that level and found support buyers against that level. We did break below it on Friday, reaching below this old low, swing low right here. That again, this was the failed break to the downside, the forced breaks to the downside. So we did move below that level, but quickly rebounded back to the upside. As you can see, we are closing the week, or we close the week back above this swing area through here. So there is a little bit of a more bullish bias going into the new trading week, only because we're back above that swing area. That's a short-term trading opportunity that could lead to further upside momentum. If we had further upside momentum, I'd look toward this area right through here, where we had different swing lows during last week, and swing highs through here, and swing lows through here, and then reestablish the level as resistance. So this area right through here is going to be our next key target on the top side. If we're able to get above that level, it opens the door for further momentum up toward the 38.2% retracement. That would look toward that level, roughly corresponds with these highs right through here. So in the short term, we are looking a little bit more bullish just from a trading perspective, not necessarily from this perspective, but from the rebound and the failure on the break below the swing area through here. So watch the 130.34 to 130.60 level as support if we're able to stay above that, more bullish. If we move below that level, however, we're going to go down and retest the lows from last week, the low price through here, and we could ultimately move down toward this area and down toward our low prices through here as the next key target. So right now, a little bit more bullish in the dollar versus yen heading into new trading week.